Holistaplan presents Tax Time with Jeff Levine. Let's talk taxes. Hi, I'm Roger Pine from Holistaplan. I'm here with Jeff Levine. He is the Chief Planning Officer at Buckingham Strategic Wealth. He's also a member of our team at Holistaplan as our tax planning strategist. Jeff, happy first day of filing 2021 returns.
Yeah, as we record this, the IRS is open for business. As I've said earlier this year, you can now successfully have your 2021 tax return ignored by the IRS.
There you go. And I remember from my days in as advisor, there were those clients who absolutely wanted to get it in as early as possible.
I found in my experience, Roger, those are usually the ones that want a refund, not the ones that have to pay. It's for whatever reason, people seem okay paying later in the year.
To me, it's my experience. It was the folks generally retired who just didn't like having it hang out there. They were self-filers in general. Anyway, that's done. And simultaneously, not coincidentally, you can now upload 2021 tax returns to Holistaplan. So, and in fact, we're recording at about 10:30 Central Time, and we already have, I think it's about a half dozen have already hit the system this morning.
Nice.
So yes, that's happening. And what we figured we would do today is, this is not like a full review or this is not a checklist of how to review a tax return, but we figured we would go through some of the changes to the main tax return forms. So advisors who are accustomed to doing a review can start to kind of just get an idea for what's different out there. There are some pretty major changes, but February 10th, if you really want to just see a detailed, how do we do a tax return review, we Holistaplan are going to do a CFP CE eligible webinar that will go through in much more detail. Here's how you do here's how you do a tax return review. So you ready to roast the tax return design, Jeff?
Well, let's start with a high level. Do you remember when this was going to be a postcard?
Yes, I do. Yeah. Actually, yes. And in fact, they tried to get there in 2018, remember?
They did. Now, admittedly, 2018 became a postcard, but then you also had to file 75 other postcards with it, right? We went from having a lot of the information on, let's say, Schedule 1 that was on the 1040, moved to a new schedule that so many of our clients in particular who are making IRA contributions, HSA contributions, those sorts of things would have to file. But yeah, we've almost gone complete 180 now. And I think one of the overall themes that people are going to notice this year is that we're going away from trying to minimize the number of things on the tax return to detailing more. Give me more details. Absolutely. That's what the IRS wants, right? The overall theme of this is tell me more on the actual tax return. So let's start with the 1040. I see you brought it up, Roger, which is great.
Yeah, I hope that we're recording this, so I hope that Zoom handles showing the visuals and showing us. I'm not really sure how that'll work out in a recording, but yes, 1040 is up on screen. If you're watching this on a phone, there's no way you're going to see what we're seeing, but just a couple comments on 2021 that I've noticed. One, right below where you put your name and your address and stuff is this question about, at any time did you sell, exchange, or otherwise dispose of virtual currency? I commented to you, there you go. Thank you, Jeff. I commented to you that in 2019 was the first time they had this question. They put that at the top of Schedule 1. And then I noticed in 2020, they moved it even higher. You notice it's like before even they ask about your wages or your children.
Right.
And so for 2021, I was thinking, like, are they going to put it even higher, like before your own name? But they've stopped. Like they've gone far enough to say, like, we're going to ask this question before your children or if you're over age 65. Pretty amazing.
Yeah, and that seems to be a real focal point of the IRS, not just here, but if you look at, they released their report kind of the state of the IRS, like what we did in 2021.
Yeah.
I read it almost as a PR report as opposed to like a really like, let me tell you what was good and bad. It seemed like a very healthy spin on a positive IRS. And, one of the things that was touted right in the beginning was the number of assets number of cryptocurrency assets that were seized in terms of dollar amounts. They are hot to trot on going after cryptocurrency. It is now, for those who are legitimately just using it as an investment, there's no concern there that this is going to be taken away by the IRS, so to speak. But if you are actively using Bitcoin to thwart taxation or for any illegal means, and not you to our advisor group, of course, but just to the general you of the world, like the IRS has that as a high priority focal item, and you should expect to see even more action on that in 2022 and going forward.
Maybe they'll make the font bigger on that section instead of moving it up. Though.
There you go. I like that. It'll be the same size as the where it says 1040 at the top.
Yeah, exactly, exactly. Also different on 1040 page 1 is, of course, the charitable contributions. When you take the standard deduction, that's in line 12B. We had that whole video we did about how that is now in 2020, it was an above the line deduction. Now it's a below the line deduction. So there
below
it is.
Below the line.
And in fact, I saw actually one of the returns that was uploaded today from 2020. I noticed the person took the standard deduction, but had nothing reported on 12B. And I just think as an advisor, that's something worth checking. I mean, it's people give $10 to something, so it's worth just checking with a client or just highlighting that one more time to clients. I was really surprised to see a standard deduction, but nothing in 12B there. So that's 1040 page 1. The crypto line was a thing I wanted to highlight. Page 2, there's some new stuff around. Obviously, the child tax credit's a little bit different this year. We always had a non-refundable portion and a refundable portion. And so, in fact, those lines are the same. It's just the descriptions of them are slightly different. You'll see line 19. It says non-refundable child tax credit or credit for other dependents. My understanding, and this is based on looking at Schedule 8812, the old non-refundable child tax credit still exists in certain cases, like if you lived outside of the United States.
That's right. It's very rare, but yes.
Yeah. So that is there. And then you can see in line 28 is the 2021 refundable child tax credit and the additional child tax credit. So like that was again, if you're not eligible for the new 2021 thing, you can have anyway. Schedule 8812 is definitely something that's going to need to be in the advisor's arsenal. They're going to need to look at that for every return this year, because there's a lot of good stuff on 8812. By the way, I should have said on page 1, Jeff, I was disappointed to see that the dependent section does not break out children who are under 6 versus over 6.
Yep.
Form 8 or Schedule 8812 does have that breakout, but it's just like,
yep.
I don't know, if you're in the business of extracting data from forms like I am, like just put another check
birthday, right? Like many states require you to put a child's birthday or the taxpayer's birthday. It's actually pretty amazing that we still don't have that. Now, of course, the IRS, by virtue of the Social Security number, they can do some homework and figure out what your birthday is. But yeah, it would be nice just to have that right on the form.
Yep.
And to make our lives easy.
Oddly enough, I was not consulted in the design of these forms, unfortunately. So that is, so another thing that I like from a data extraction point, and you said this, Jeff, in general, the theme is like, we're just getting more information on these forms, which is great. But the stuff around the earned income credit, so line 27A, B, and C, we now have information about non-taxable combat pay, the prior year earned income election people can do, which is helpful for those of us writing code to try to calculate the earned income credit, because we have more information. We don't have to make as many assumptions. The information's right there on the return, which is nice.
Yeah, actually, the more the IRS goes this way, the more a tool like Holistiplan can be valuable, because you can pull more from the data, right? The more granular it is, the better the tax report can tell you about what's actually going on, the better you can plan for the future, because you've got these actual dollar amounts built right into there on the form. It actually is more difficult from a reporting standpoint, because you have to get those things on the right line, and tax software is very helpful But a lot of, I mean, you talk to any CPA and they'll tell you that half their battle is actually knowing the code and half their battle is knowing the software to get the things to show up on the right places, on the right lines when they know where it's supposed to be in the first place. So there is some additional challenges there associated with the prep side, but on the planning and the tax report side, this is a dream come true.
Totally. Yep. Yeah. And yeah, it's, as an advisor, you were thrown more information, which can start to cause information overload syndrome, but a computer never gets tired of looking at all those extra lines, which is nice. Line 30 is the recovery rebate credit. Maybe the last time we'll see that, unless they come up with another stimulus plan for us, but that'll potentially be the last time we have to look at that line, but that's still there.
I think I can speak on behalf of all of us. It's just, let's hope that that's the last line that there, right? Because it means we don't need another recovery credit.
Yeah, totally. Yeah, I agree. That was 1040. I will say one thing I really want to highlight that Schedule 8812 need, because one of the things that we noticed, again, I haven't seen a lot of real returns yet, but one of the things we noticed is kind of like with the Obamacare credit, the premium rebate credit. If you, this is the one where you could get paid in advance, the child tax credit, you get paid in advance. And what seems to be happening on Form 1040 is if you received the credit and if you received all the money for the credit and the two are the exact same number, it doesn't show up on 1040 at all, which I think is okay. It's just that you, the advisor, may not have that level of granularity to know that, okay, they actually received this cash flow. As a planner, if you're just looking at 1040, it looks like it didn't happen at all.
Right. What's wrong with your CPA? They don't know that you have children?
And like, where'd all the spending come from, right? Well, actually, I was getting money in. It was just reported on Form 8812 and it netted out to zero and nothing showed up on 1040. So that's just going to be a thing that is going to be critical, I think. Let's move on to Schedule 1, which is a monster now. Schedule 1 used to be one page. First half was other sources of income, not reported on 1040. The bottom half was above the line deductions. Now it's a page for each of those categories. And yes, you've highlighted 8. So 8 used to be one line. It was just like other income. Go ahead and just drop a number in there. Now they're giving you a breakout of what all the things are. Although look at 8Z, which is still other income. Not
other, yes.
Yeah.
That's like adjusted gross income, right? Like modified adjusted gross income. It's just adjusted gross income that's been further adjusted.
Yeah. And I don't know about you, Jeff. I mean, I kind of we've looked through these and we're updating our own review checklists.
Yep.
I don't know how many of these are necessarily actionable, like Alaska Permanent Fund dividends, for example. I don't know. Oh, there you go. Taxable HSA distribution. Some of those are like, wait, we ought to talk about this. Yeah. Really, let's put it this way. If you see something in this section, it's probably worth having a conversation about it because it's out of the ordinary enough to warrant a conversation. You've highlighted 4, it looks like. Would you want to comment on those 4?
I just think those are probably some of the ones that are a little bit more impactful discussions, right? Like net operating loss. Let's go into this. Let's understand like what's going on here, even just from your long-term cash flow projections. Are we running a net operating loss because we've got some paper losses here that that are helping us from a tax perspective? Or are we running a net operating loss because you're trying to start a new business and right now it's just not going so well and we've got to figure out some other ways to support that for the future? Taxable health savings account distributions, like, whoa, what are we doing? Like, we probably shouldn't be taking out money from our HSA if we can afford to pay for our current healthcare expenses from other funds, which would be tax-free, right? We probably shouldn't even be taking those distributions,
let alone taxable ones.
Right, let alone taxable ones. So there's an education opportunity there. Stock options, that's a big one, obviously. What's going on there? Let's get into our equity comp discussions. And then obviously taxable distributions from ABLE accounts. All sorts of special needs planning can be done there. And once again, that you would expect not to see too much on that line from a taxable distribution from an ABLE account, because in order for those distributions to be tax-free from ABLE accounts, those are those 529 capital A accounts that were established about nearly a decade ago already. I mean, I think we're probably on the 7th or 8th year of ABLE accounts. Those accounts, in order to be tax-free, it just has to be a qualified disability distribution, and that is really broadly defined. So if you're not getting a qualified disability distribution, you probably want to do some research and be like, what's going on here? Because again, it is really broad. Should be able to get tax-free distributions out of that account most of the time. Got it.
Okay, those are good. Yeah, and again, February 10th, we're going to do a more detailed tax return review checklist. But yeah, those are solid. Deductions, again, it's a whole other page now. Missing now is the tuition and fees deduction, gone. And then, yes, you've highlighted these other deductions. These are new line items that we have on there. That Archer MSA is also a new line item that wasn't on Schedule 1 previously. So this is all new stuff. Some of it super obscure, but anything that shows up on there is likely worth a discussion with the client. Anything jumping out at you there, Jeff?
Just a note, like you mentioned, the tuition and fees deduction is missing. We don't need to go looking for it. It's okay. The IRS did not make a mistake. I just want to remind people, like, that's gone, right?
I should have used different wording. Yes.
No, that's all right. That's good.
Permanently missing.
Have you seen this deduction, like on a milk carton somewhere?
Right.
You know, like no, that's going to be something that we can we don't have to worry about going forward, because it was eliminated for 2021 and going forward with higher income amounts for some of the credits. So it's actually was, for the most part, a good thing for taxpayers. And yeah, just kind of going through and looking at the various deductions, you know, there are some that are a little bit more interesting than others, but most of the other adjustments here are things that are kind of like, you're probably not going to see all that often, right? It's really the lines 11 through 23 that are pretty important, and with the most, you know, really right up at the top, right? These are still going to be your common ones. If you look for 2020, the 22 line, save for future use. I love how they did that on 22 and not putting strange. Archer like there. Like, why is that like in the middle? These are the things that drive me nuts at night, Roger.
I'm with you. Yeah, they do that all the time. Is that reserved for future use line?
But in the middle, like, why is it 25? Or, you know, like, why is the last line reserved? Whatever. Things that don't really matter but bother us, Roger.
Yep. Yeah, I didn't have anything else on Schedule 1, so it's a beast now. It's 2 full pages long. Schedule 2, which is your additional taxes, is also 2 pages now. And there's some things I like about it, actually. If you look at, well, in general, like, we're splitting stuff out, adding more things. So for example, lines 5 and 6 on here used to be just one line. That's kind of unreported tip income type stuff. I really like lines 11 and 12. Yep. That's your those used to be combined into one line, which, again, from a data extraction perspective, again, I'm just being selfish here as far as trying to pull data out of a tax return and then try to put it in the right boxes. They were all mushed into one big box, including some other taxes. So I love to see those on separate lines. I doubt it changes anyone's lives, but it's
from a planning perspective, it's great to have them broken out, because this first one here, right, line 11, there's not all that much you can do to help the client here, other than say, like, hey, stop making so much darn money, right? Mm-hmm. Like, that's effectively your planning strategy.
Solid financial advice.
Yeah,
the best.
But here, line 12, right? That's really good advice there. But line 12, there actually are a lot of things that we can do to impact the amount of net investment income tax someone pays, whether it be, you know, managing assets in a little bit different way, tax locating assets in a different way, using plans to reduce certain income, et cetera. In other words, like, now we've got it where before that was kind of there in one box, and we said, like, well, let's go figure out where that's actually coming from. Now we can see if you've got something on line 12, that's a really good planning conversation. Something on line 11 is worth noting, just to note, but there isn't all that much you can do to reduce that.
Yep.
Because even things like putting more money into a plan doesn't lower your Medicare wages or something like that.
Yeah, and this stuff was and is on those forms 8959 and 8960, but it's I like that they've kind of pushed it out so you can, it's just more readable this way, broken out like
it's
that.
The high level. Yep.
just better design, Jeff. And then now we've got, this is the new thing. And this other additional taxes, this is all new, like all this stuff, and including a number of HSA related things, Jeff.
Yep.
So I will point out line 19, which is if you have additional tax arising out of over, what is it? Over, I was going to say
over receipt,
over receiving.
Yeah.
That's a word. Your advanced child tax credit payments. That's where that's going to come off of. Again, Schedule 8812 is something I brought up before.
And that's worth, especially for your higher income taxpayer clients, checking out, because there are, there are a lot of people who got that incorrectly. I know at least one person on this call, Roger, wink, wink, nudge, nudge, catch my drift, who may have received a child tax credit payment early this year or early last year, and then said like, why am I getting this? Had to stop it, right? And then, but there are also individuals who have ramped up income over the previous year, right? Where in 2020, which is what that credit was initially based on, that income, they started paying it, but 2021, they did much better. And look, let's face it, 2020 was a worse year for a lot of people, including a lot of business owners, who, thankfully saw things come back a lot in 2021. If people had 2020 down years, or just naturally were ramping up income through a growing business or through advancing in employment, 2021 may have been a lot higher, and they would have been phased out of that credit, but it was paid based on 2020's income. They may end up owing that back, and that could be a lot of money, right? Remember, it was half of the credit was paid in advance, right? So if you think about, let's say, just 3 kids, that's $9,000 if they were all 6 or older. That's $4,500 that could have been paid throughout the year that may have to be paid back. And one other note here that's worth noting, Roger, is for some with more modest income, if they did receive an overpayment, there are some safe harbors we're not going to get into on this call, but there are some safe harbors where that would not have to be paid back if an individual had income that was low enough throughout the year.
Yep. Speaking of credits, Schedule 3 is also a monster now, 2 pages long. You've got your page 1 is your non-refundable credits. Yeah. Page 2 is your refundable credits. Let's see. Line 6, that used to be other credits. That's what was on Schedule 3. Now they've broken that out for a whole bunch of interesting goodies. I wanted to highlight 6B, Jeff, credit for prior year minimum tax.
Yep, that's a good one.
And then these are these are non-refundable credits. And then the next page was your arrows there.
Whoops, I'll get away. Don't you worry, Roger.
Let me point the arrow at exactly where I wanted to talk about, actually.
Oh, that'd be good.
13G.
Wow, so look at that.
We have another breakout. Hey, look at 13E. That's another one of your reserve for future use boxes. But 13G is that for 2021 only, credit for child and dependent care expenses, the refundable dependent care credit, which I think is going to surprise some people as being pretty sizable, bigger than they expected potentially. So please save your seats, everyone, on your dependent care for 2021. It's a different game.
Oh, sorry, Roger, I didn't mean to cut you off there. Especially because remember the child and dependent care credit was so large last year. So between your regular child tax, like let's say you had a child who's, you have 3 kids, 2, 5, and 8. They're all under the age of 13. Well, 2 and 5 meant you could have gotten $3,600 a kid, right? So that's $7,200. Then we've got another $3,000 for your 8-year-old. That's $10,200. Plus, you could have gotten an $8,000 child independent care credit. That's over $18,000 of tax credit last year. It takes a good, healthy amount of income to run up an $18,000 tax bill when you factor in even just the standard deduction, et cetera. And that's absent anything else like IRA contribution deductions, 401k deferrals, et cetera. So there are a lot of people who will benefit from those refundable tax credits last year who normally don't see refunds to the same extent because of the fact that they were made refundable for 2021.
Yep, it's a huge one, and so advisors definitely need to have 13G on their list of things to review. Make sure that something ended up in there if your client is paying for dependent care. That was the tour of the big changes. Again, we're going to do a more extended version of this on February 10th. I did want to show Form 8812 before we go, which is, it's a beast now. It's 3 pages long because everything is bigger in 2021. But you can see the lines 4A, B, and C. That's where you're breaking out what are my total children, who are the ones under age 6. You'll see this line 13. It talks about check the box if you lived in the U.S. or Puerto Rico. If you don't check that box, that's where you're doing your calculations on page 2, and that's where it looks like you're still using the old versions of the child tax credit, not the new refundable one. So that's what page 2 of this Schedule 8812 is. And then page 3, that's where we're using that's where the calculation of, okay, here's what I received in advanced child tax credit payments was, and then here's what I was supposed to get. And then that calculation you were talking about, okay, here's the actual tax due if I over received. We're going to use that word as if it's a real thing. Over received my advanced child tax payments. And that's line 40 there, your additional tax. So 8812 is going to be part of the toolkit for 2021 for sure.
I got nothing to add there, other than it's a lot of lines, and I can't imagine the individual who tries to do their return by hand this year, Roger.
Yeah. Oh yeah, for sure. Yeah. Well, I think that's it. That's your quick tour of what's different in 2021 for the 2021 forms. And we're going to be here for you. Start uploading them to HolistaPlan. We're going to be dropping more and more observations into the tax report. We'll come out with, as we kind of dig into things and learn things as returns come in, more content where we're talking about what's new. And we're just here to help advisors do the best job they can with new, interesting forms and new, interesting information to review.
I'm just excited that we can finally know who are our clients who have secretly been hiding their Olympic medals from us.
No kidding.
Yes. Now we're going to know.
New on Schedule 1. You're right.
Yeah, that's it. We're going to know.
Well, Jeff, this was fun. Thank you for visiting with me, and good luck getting your tax return in. You're already a little late because some people already uploaded theirs this morning. Yeah. Have a great week.
Happy tax season, everyone.